after the rejection and bounce from an area of high confluence, or else you would have just had a trendline break, and that would be meaningless. Now, why is it important to use the 4-hour time frame to look for a trend change after the rejection of your access point? Well, because without the trend change or trendline break, price could have easily done this instead and kept making higher highs and higher lows, and kept respecting the immediate short-term uptrend and broke right through the long-term trend line. So let's take this concept a step further. Now, in this example, we'll show you another trick you can use if you are a longer-term trader, which is instead of using the daily time frame and 4-hour time frame, using the weekly in combination with the daily for swing trade entries. So this is the weekly time frame, and this is the daily time frame. Remember that in a previous video, we stated that things you find on the weekly time frame hold more weight. So let's go through the process again. Here in the weekly, you have the clear moving downtrend as price is making lower highs and lower lows. So you want to trade with the moving big picture downtrend. You then had your trend line established through these 2 points here. You had multiple rejections and your support turned resistance zone here. Here is your access point and area of high confluence where the trend line and resistance crossed. Once price got here, you had 2 weekly candles that failed to break through, including a bearish red candle that rejected the weekly resistance level. Again, bounces and reactions don't equal trades, so we put a short-term trend line below the immediate trend. Now, in order to look for short trade entries, you need to confirm that the short-term uptrend is over. So we need to go to the daily time frame to look for a trend change in bearish price action inside of this current moving uptrend before looking for a trade entry short. Now, here in the daily time frame, this is your same trend line from the weekly, the same resistance level from the weekly, the same access point from the weekly, and the same uptrend and trend line from the weekly. So here is your moving uptrend, where you have a run, a pullback, a run, before you had your break of the trend line and a lower low, and you can start looking for trade entries short through a breakout or intraday entry. Again, the key here is that this all occurred after the rejection and bounce from an area of high confluence, or else you would have just had a trendline break, and that would be meaningless. Now, we're going to take it even one step further. Now, this is where we introduce true top-down analysis. We will be using 3 timeframes, starting from the weekly to the daily, then to the 4-hour time frame. So starting with the weekly, we were in a clear moving downtrend. Here was the weekly support turned resistance. Here was your trend line. Here was your access point. Now, after you identified all your levels on the weekly, we jump to the daily. Here on the daily, you had a perfect long wick candle rejection of your access point, meaning a rejection of both the weekly trend line and weekly resistance. But again, still no trade unless we have confirmation that the short-term uptrend is over. So we go to the 4-hour time frame to find a trend change on the short-term moving uptrend. Here on the 4-hour time frame, you have your weekly and daily resistance, weekly and daily trend line, and weekly and daily access point. You then have your short-term trend line here, and once price hits the access point and then breaks the short-term trend line, your short-term trend turns bearish and matches the long-term bearish downtrend. And this is when you start looking for trade entries short, as all time frames are bearish and confluent. So now that you understand how to use trend lines for trend trading, let's move on to the second way to use trend lines, which is through reversal trading. Now, before we continue, these videos take a lot of time for our team to create. So if you are enjoying the video so far and want us to continue to make more videos, make sure to hit the thumbs up button and to comment below right now with your questions and thoughts, and we'll work our best to answer all your questions and to create videos around your requests. So in this section, we are going to go through a reversal trading strategy with trend lines. Now, what you do is you look for key price action patterns that have formed right before a trendline break. Now, there are many kinds of price action patterns you can look for, such as wedges, triangles, combining price action patterns with candlesticks, and so forth, as there are a lot. But for now, focus on these 2, the double top or double bottom price action pattern and the trend change price action pattern. So let's start with the first, which is the double top or double bottom right before a trendline break. You first identify your trend line through these points here. Now, this is a clear moving uptrend. And the reason you want to identify a reversal price action pattern right before a trendline break is because you are going against the dominant uptrend. What this means is just a trendline break can often be a fake out. So we like to pair a reversal pattern as an early signal of a possible big picture trend change, but then to pair it with the trendline break as confirmation. So the price action pattern we got was this double top, which is a reversal pattern. Now, what does the double top tell us in terms of the uptrend? Well, it shows that price failed to make a higher high, which means this is a loss of momentum. Now, if you have seen our previous videos, evidently many traders would have taken a trade right at this long wick candle rejection of resistance and then waited for an intraday trend change. But for more secure traders, what you can do is wait for the trendline break to confirm that the uptrend is over. This is also a good example of why you should never chase trades, as you had trade opportunities right at the double top, but also had opportunities to enter through a breakout strategy after the trendline break. Now, if this were a downtrend, you would look for a double bottom. So let's jump to the next pattern we look for right before a trendline break, which is a trend change price action pattern. So in order to spot a trend change, you look for these traits specifically. In an uptrend, you look for a lower high or a lower low to occur right before a trendline break. And in a downtrend, you look for a higher low or a higher high to occur right before a trendline break. So here is your moving uptrend, and we place our trendline below the uptrend, connecting these points here. You have your run, pullback, run, pullback, run, pullback, run, pullback. Now, at this point during the trend, you have a clear uptrend as price is making higher highs and higher lows. It is not until you have your lower high form here, which is when you would think to yourself that a lower high in an uptrend shows a loss of momentum. Once price then breaks the trend line, this confirms the trend change and shows bearish momentum entering the market. Again, the reason you want to look for reversal price action patterns before a trendline break is because it shows momentum loss, which is important when you go against a strong trend. So let's take this one step further and add in multi-timeframe analysis to this concept. So here on the weekly timeframe, what you would have first identified is that this was a moving downtrend. You then identified your trend line through these 2 points here. You would have then identified this double bottom through these 2 points here. So what you do is you want to jump down a time frame to the daily so that you can see more detail into the price action that is occurring within this double bottom and look for a trend change price movement. So here on the daily, you have your same trend line from the weekly and your same area of support from the weekly. Here is where the double bottom occurred on the weekly time frame. And again, we see a lot more detail on this daily time frame. So again, in order to confirm the weekly double bottom reversal pattern, you want to also look for bullish price action that shows a trend change from a downtrend to an uptrend on this time frame. And you got this through the following things. You have your clear moving downtrend through the run, pullback, run, pullback, run. Price then failed to make a lower low and made a same low, showing a loss of momentum. So you have a double bottom inside of a double bottom. And then a higher high, which is the first sign of a possible trend change. You then had another higher low, which is another trend change signal. After you had your trend line break, you would then look for breakout entries through the intraday and lower time frames. So this topic of using multi-timeframes and timeframe confluence gets even deeper and would take too long to completely explain in one video, but we will continue to build on it in future videos. Now, this is a very important point we want you to understand, which is that trading comes down to the simple concept of trade quality, meaning there are low quality trades and high quality trades. The more you learn means the more you can see, which then allows you to choose between okay trades and high quality trades. Think back to the past videos where we showed you the importance of candlestick patterns at key levels. And of course, you can enter just like that, but those are average quality trades. What you want to do is take high quality trades, and knowing the concepts we have introduced in this video will help you build towards that end game. Increasing trade quality is knowing when not to take trades, which is just as important as knowing when to take trades. So if you want to learn more about our trade entry strategies, head on over to our website at wisetrade.com. So if you enjoyed this video and want us to make more videos more frequently, make sure to hit the thumbs up button and also comment below with your thoughts and what kind of topics you want us to cover, as this lets us know you want more videos. So thanks for watching, and I'll see you in the next episode.